going to go ahead and get started here. Before we get started, we had some really good news last week. DNA Behavior was selected by Financial Planning Magazine for the AI Innovation Award, which will be presented in October for client experience, for really, making that whole client experience so much easier using AI tools. And we're extremely excited about it. And the other thing that's happened this year, and most of you saw that, Hugh was selected to be one of the Georgia Titan 100 CEOs back in early March. So we're still riding the coattails of that award. So it's just been a big year for us. And I think this Pegasus ratings, sort of the whole concept or notion of it is pretty remarkable. And he will get into a little bit more details on that. But we started talking about it around October. Hugh had this idea around this Pegasus ratings. We didn't call it that at the time, but it was phenomenal in my mind how it was actually coming together. But to see it come together today is pretty remarkable. We wanted to invite those folks that could really participate, understanding, ask Hugh a few questions, because on a general release, we're planning to make a big deal out of this over probably the next few weeks. So this is the first preview into it. And with that, without further ado, we'll turn it over to Hugh.
All right. Well, thank you, Leon, and good morning, everyone. So I'm very excited to talk about this report because there's been some findings that have unfolded as we've done this work over the last 8 months and put this together. So it is exciting, and I think just to recap on what Leon said a little bit. Since our beginning in 2001, we've been very focused on how we hyper-personalize experiences using our behavior and money insights, and the digital scan capability that we've developed this year, although, to be honest, it actually originally got developed in 2017, and we were going to deploy it with a client, but that ultimately never happened, and we somewhat shelved it. But it really started to come to the fore last year, where we were getting asked to work on some cases and opportunities where mass scale hyper-personalization was required. And that is the genesis of how we've won that AI Innovation Award, is through the use of the DNA digital scan. So you can imagine that if you're a financial advisor, wealth manager, and you've got a new client in front of you, rather than them doing our profile up front, a scan can be done, and you're going to know something about them to customize the experience from the very first, literally from the very first interaction with them. So it's going to accelerate the know, engage, and grow process a whole lot. So well done, Ryan, for piecing all of that together and positioning us very well there, and with the support of Leon as well to help make that happen. But on a parallel track, we were at the same time working on our leadership model, and I've just had this burning desire for a lot of years, really nearly all the time that we've had Financial DNA as our lead product on, and I've known that the financial behavior of leaders creates financial value. But we never really had a way to properly demonstrate that in an easy way and at scale. But I never lost that dream of being able to do it. And it's really AI that has enabled that to come to the fore. And I think you can imagine when, you think about my background as an accountant, then becoming a wealth manager and moving into the human behavior area, how this is something that, is extremely exciting, because any business problem or situation that I look at or I see, there is always a behavioral element to it. And that's really the genesis of me being a behavioral solutions architect. But now to be able to move beyond the financial planning world where money is the primary subject of conversation to some degree, but to make it a primary issue in leadership and how value is created in companies is another matter. And that's what we're going to talk about today. So, just to position this, what are we doing? We are going inside the mind of the company. And the mind of the company comes from its CEO and its leaders. And in a way, the only way in which one has been able to know what's going on inside a company has been from looking at the financial statements and news reports and taking intuitive guesses about the people. But no one's really had an insight to what is driving the decision making of the people. And at the end of the day, it's the people that create or generate the numbers. And so we need to understand their mind, and that is really what Pegasus Ratings is all about. In the sense that we are putting measurement on the mind of the company in terms of the financial behavior. And our proposition is that the money mindset of leaders drives 80% of the company valuation. And I'm going to show you something at the end which literally, I think, backs that up. But when we've talked about leadership historically, it's been, and certainly in the DNA model, but pretty much everybody else out there that talks about leadership or addresses leadership is, it's around getting results, managing the relationship tension, emotional intelligence. But really, the role of a leader at the end of the day is to create financial value for the company. And so the leaders themselves have got to be cut from the cloth that's going to create financial value. If you've got a leadership team that is not going to create financial value, there really isn't much more discussion. But if they do have the right wiring to create financial value, then can step in the leadership development to work on how they might build relationships, their emotional intelligence. But really, the first thing is can they create financial value? And who in the business is going to create the financial value? And what we're trying to do with Pegasus Ratings is really step in a lot of ways and be the morning star of people assessment or leadership assessment. So all of you have, I'm sure, have heard of Morningstar, and you can go and log into Morningstar, and you can get financial analysis, and you can get a 1 to 5 star rating on companies' financial performance. Well, why not get that same rating on the people? And again, what is the driver of the company value? And it's the people. So we see Pegasus Ratings becoming the new gold standard for predicting leadership performance. And there's two parts to this. There is our capability using AI to undertake a digital scan of the leaders. So the leaders do not have to participate in anything. If we know their name, which company they're working with, we can go in and scan them. And that's what we've done with the S&P 500 leaders that we're going to talk to you about today. But the other part that an AI has enabled us to do is to actually go in and mine the financial statements and pull out key financial data, look at where that particular company is ranking in terms of its profit percentages versus others in its sector, and align the behavior of people or the leaders to the profits that the company is generating. And there's some very interesting results have come out in that. And while we've done this for public companies, as far as this report is concerned, that you've all been given, this same process can be done for private companies. So really, any company can be assessed this way. And so, what are we doing here is we are laying on the table that the financial accounts only tell you the past, but in reality is in making decisions, you need to know what's going to happen in the future. And the future only happens because of the decisions of people. So you need to understand more about the financial behavior of the people and the types of decisions that they will make. And one of the other problems that has always been there in assessing leaders so far is that it's been a relatively intuitive process. And if you think about it, that you're making an investment in a company, or you're making a major decision about a company, whether you're an investor, board member, or the leader, a lot of the time it's been a guessing game. Whereas now with our Pegasus ratings process, there is no excuse for not knowing the people, because it can be done instantaneously through our system, and that's what we're going to show you today. So, what is the benefits of this process is upfront transparency. And again, I'll emphasize that there is no excuse for making a major decision, regardless of what role or relationship you have with the company, before you know more about the people. I think that if you're a board member, this is going to bring a lot more governance reliability to the decision making, because you're going to be able to see into where is the drive for certain initiatives, decisions coming from within the company. And if you're the investor, you're going to be able to look at the people, make a prediction about the people, and reconcile that to the future projections of the company. And I think we all know in venture capital, many deals fail, including even in the more mature companies in private equity deals. Many deals fail. The leaders might have been great for the start, but they aren't the right people to take the company to the next level. So what we have built here now is a new leadership financial behavior model, and there are 6 metrics that DNA behavior is measuring and looking for in each leader. And I'm going to show you the impact on profitability in a minute. But the first one is a person's results drive. So we've always been able to measure that. The second one is, what's their relationship engagement capability? So are they really a relational type leader? And then we have got measurement on, but what we've then said is, and look behind is, okay, the leader could be results driven, but we've wanted to get more pinpointed than that. What is going to create financial value creation capability? And there are 3 key metrics underneath it. The person's financial goal drive, their innovation focus. And so the innovation focus is not only, I'll come back a step, the financial goal drive is coming from the pioneering trait. So is the person competitive to achieve goals? That's really the number one. The next one is the innovation focus. So how creative are they? But also, what about their risk-taking? Are they prepared to back innovation? So both those scores need to be high. And then there's fiscal control. What's their ability to manage money, manage budgets? And then the 6th one is the financial prudence. So across here, what we've seen with the successful companies that are higher performers, they are managing the high stakes decisions very well, and the resourcing around that. And that is looking at the combination of the anchored traits and the plan traits baked in together. That tends to be strong. Here with the relationship engagement, what we're seeing is, and you'll see this in a minute in the statistics, is those companies that are doing better are investing money in their people culture. So it is true that relationships do help generate profits, but we need all of these other metrics to be ranking high. So here's the result of our work, that if a leader has a strong results drive, a 4% increase in the strength of their results drive leads to a 7.38% increase in profits. Relationship engagement, a 5% increase in the strength of the relationship style of the leadership increases profits by 11.43%. Financial goal drive, this is the big one. A 4% increase in the strength of that behavior increases profits by 21.51%. So you can see where the power is. Then the innovation, again, if that increases by 5%, that results in 7.78% increase in profits. The fiscal control is an interesting one. You know, if it increases 8%, then that leads to a 1.66% increase in profits. Now, to some degree, that's a lower incremental increase in profits. But the real key is that when you combine these three, being the financial goal drive, innovation, focus, and fiscal control together, that's when you're getting the outperformance. So the company, while the company's got to innovate and drive towards, you know, building a pipeline of sales and achieve continuous growth, which comes from being able to innovate better, it's got to be able to manage its fiscal resources. And what we see is that some leaders are pretty good at the financial goal drive and the innovation focus, but their fiscal control is weak, and therefore there's a lot of spending in the money in money in the company that doesn't need to be there, and that's having an impact on the overall performance. And then the financial prudence is really the sensibility again around making the big decisions in the company.
Because I called her. She's like hurting.
Somebody else's voice is coming through. So what was our model for getting there? What we did for this project, and again, credit to Ryan for helping make it happen very expeditiously, very efficiently, being able to help pull together all the numbers using his great technology skills, is that we were able to, using AI, identify all of the CEOs and the key executives from 495 of the S&P 500 companies. And then we used our AI platform to go and scan them from public sources only. So we haven't gone and done any raids on private data. We haven't gone behind the wall of Facebook or LinkedIn or anything. We've gone to public data sources only. We've picked up a range of elements about the person. They've then processed in our AI platform and then sent back into our DNA system, our technology platform, and a unique style is created for each person. And then all of the factors and sub-factors are measured. And that then forms the basis for us knowing who each of these people are on a 75 to 80% accuracy level. That's where we've got it to so far. I think that you know, we're at around version 1.5 of this. I think by the time we finish the year out, that accuracy level is going to go up even further, because we're going to be incorporating more elements into the model. But so far so good. And then we have done a reconciliation, essentially, of those executives against company profitability within their industry sector, and that's then where we've produced the ratings. And again, it's all AI is doing all of that, so we can do this very quickly. Once we want to deploy the system. So you've all seen graphs like this from us before. But for those out there in the world who haven't, we have to, of course, bring them on the journey to understand how the behavior fits together. But what we're going to see is that that a lot of the leaders sit here in the strategist, initiator, and influencer area in the S&P 500 companies. This is not making a statement, though, that you have to be one of those three styles to be a great leader, and that you can't come from the more patient area or the relationship area. It's just the fact that in the S&P 500 companies, there's more of them up here, and that really comes through here, where 69% of the S&P 500 company executives are the more growth style and results-orientated influencers, initiators, and strategists. And there were no relationship builders or facilitators coming out, interestingly enough. But as we do more and more remember, that's just for the pool that we measured for this report. That doesn't mean they won't come out or that they are not there in the secondary levels of these companies. We only did essentially the top 10 or so nominated key executives. We didn't go down the next level. And one of the things that I've always been interested in is the dominance of the CEO. I think that the CEO has a huge impact, or intuitively, I always believed that the CEO had a huge impact on the company. They are ultimately responsible to the board for what happens in the company. They appoint the leaders around them, and the decisions they make filter all the way through the company. So in looking at the unique DNA styles of the leaders, we've done the analysis here, and you can see that there's a lot of influencers. That's probably not a great surprise there. So 4.7% or 42% or so of the CEOs are the influencer style. But that does become interesting as to what that actually means in financial behavior. If somebody's talking or got another conversation going on, please mute your call, please. So here's the results and relationships drive that we have. They've never been perfectly opposite, because they're not measuring opposite traits totally. But you can get the general idea here that, for example, for the influencer, their results drive is 67%. But because they've got some people element, the relationship engagements they're at 32% or so. For the initiator leaders and the strategists, much more results focused, and then less on the people side of the equation. And then you've got the reflective thinkers are also quite strong in terms of the analysis as well. So again, in the overall analysis here, 71% of the CEOs are heavily results orientated, and it's a pretty similar number down into the executive ranks there as well, with the balance being 30% or so relationship orientated. What this does say, though, is, and I think when we look at the overall impact on profitability, is that these executives do need to be focused on the spending of money on the culture inside their company to drive up the profitability. So then going down further into this and mining into it further, these first three metrics are the key to leadership financial value creation, and you want all three being relatively high in the leaders. And the issue for the influencer, even though they are the dominant CEOs, is their fiscal control and their financial prudence then, which is a separate metric, start to fall off there. as opposed to the initiators are generally stronger all the way through, and actually it's their behavior that's the strongest on the average of all of this, followed up by the strategists. So there is some slight differences there. You're going to, if you've got a strategist leader, maybe not as driven on the lofty goals and the competitive goals, but their fiscal control will be strong. So again, it's, the importance of this, it also reflects, where is the company at in its growth cycles. If you take a company like NVIDIA, that's sort of somewhat a darling of the market right now. It's got a very long-term management team, and it's driving growth, which has come from its years of innovation. But a question will come is it going to hit a wall somewhere where it hasn't got enough innovation, for example, coming through in its management team, and does that need to be replaced? So, or does it need to be added to, or decision need to be made? So a lot of this does still need to be looked at in the context of the companies and where they're at. But I think you can start to see that there is, what we're adding is more dimensions to be looked at when key decisions are being made in respect of a company. So the potential value, financial value trajectory, what we've seen is that this is where the companies where the leadership is more orientated towards being the initiator strategist style on the overall of the leadership team, higher value creation, and somewhat with the reflective thinker here, that if the fiscal controls are strong. And as I said before, the issue with the influencers is the control over spending. So they can create great upward momentum for their company, but if they spend all the money on innovating, flying around in private jets, not controlling the spending inside the company, they're not going to create as much financial value, and that's really the issue there. And that's something that does need to be looked at inside the companies that they lead. But it doesn't mean, all that means is that if the influencer is the CEO, which they are in 42% of the companies, who is sitting in the other seats, and what voices are being heard as the company makes the key decisions. And this might be a learning lesson for the influencer. But again, I could say for the strategists that are going to be a little bit less people orientated, and even the initiators, they might need to loosen the purse strings a little bit, particularly in the relationship engagement area. So here we can see the leadership financial value creation capability analysis, by CEOs versus the key executives. And so the CEOs overall do pretty well on having all three traits. And so on the average, the CEOs are pretty good, and that I think augurs well for ensuring the right financial disciplines and attitudes exist in their companies. And the executives themselves are a little lower here. So again, we've got to make sure the right seats are on the bus. But this is based on the stronger behaviors being exhibited. So here's what we thought was pretty interesting. And I've been doing I read research from Price Waterhouse twice a week, and it's interesting. I get a pretty interesting newsletter twice a week, and one of those newsletters in February which came out which was presented in fact, by the PwC chairman at the Davos meeting in Switzerland that's held each year. And out of the PwC research, 45% of CEOs of major companies said there was a risk that their business will not be in existence by 2030. So think about why that might be the case. And that really is, and the research brings it out, it's around their ability to manage AI. And that then brings you to, have they got the innovation capabilities set up in the right areas of their company, which is a top-down decision, and the ability to nurture innovation in their company to create new products that have got a high margin, and not just one product, but multiple products, and be nimble with it and get them into the market. And that's what's at stake for a lot of these companies. I think there are a lot dabbling in AI for reducing costs with some of the bottom-end tasks. That's good. But how are they creating transformative products and potentially changing their market positioning? And again, then out of further PwC research in July, which was an interesting follow-up because we were in the middle of preparing our research at the same time, out comes a report that shows the expected profit, incremental profit increases of companies in the varying sectors. Now, this is a little hard for you to read the graphic here, but it is in the report. But the outperformer is information technology, and it's interesting in our research. That's what they were the companies also that have got the management teams with the right financial behaviors, and they are expected to, based on the PwC research, make incremental profit gains of 19.2%. So that's way out above everybody else. Now, I know that some of them, like Google and Facebook, are throwing billions of dollars at varying initiatives that aren't bringing much through now. But as those leaders will say, you will see the results in 5 years' time. They have to invest that surplus cash flow now, even if it doesn't look good totally, to create the new future. They're lucky also, a lot of those businesses, that they've got plenty of surplus cash flow from other high margin products and services that they can do it. Some of the businesses down here don't necessarily have that luxury, but they've got to do something. But I think this graphic, I think, becomes something that is very interesting in helping all of us see where the future is, which companies might excel in the future, and where you would make investment choices, whether it's personally or helping clients do that in terms of leadership, in terms of leadership assessment, who's recruited into a business, how's innovation managed, because everybody in here is going to have to do something. And again, to reiterate the point, the companies with high predicted net profits from AI also follow those that have got the right leadership in place based on the research that we've done. And so do the company's CEO, how does that influence the company? One of the things that I see a lot, I've seen a lot of in America, and was my first question really is okay, how often is the chairman of a company also the CEO, or how often is the CEO the chairman? Because in that case, there's a very strong authority bias. It's almost the company is an empire for the CEO in a place like Australia or England. where the corporate governance rules are different, you don't get chairman and the CEO being the same person. But what we start to see is that the CEOs have a very strong authority bias over their companies. So when you start to look at the behavior of the CEO, how strong is it? If they're an influencer, you can bet your bottom dollar they're having a very strong impact on their company. What is their behavior? That needs to be looked at. Who do you then bring onto the team? And the initiators and the strategists, it's pretty much the same. Not quite as dominant as the influencer, but it is pretty. It's pretty similar. The community builders, reflective thinkers, and stylish thinkers aren't going to be as dominant in terms of their personal impact across the company. But they might have somebody else that's stronger in the team, for example, a CFO that plays a strong hand. But again, I think this is a question that needs to be asked when we're assessing companies and where's the company going to go in the future. This is just to give you an idea of what our Pegasus ratings reports will look like. So there will always be the normal DNA reports that you've seen in the past, but we will be measuring these metrics. The metrics that we've talked about today will be in the web app very shortly, specifically. But we'll also have these rating reports under the Pegasus banner as part of the service, and we're going to be producing it in real-time dashboards. So these will update as well for the individuals and the companies as information changes. So this is part of the vision of what we're doing. So this, as I said at the start, this is intended to become a full-on standalone service powered by DNA Behavior. So we do become Morningstar. We want the use of Pegasus ratings to become the gold standard for due diligence. There should be no due diligence exercise done on a company, no key strategic decision of a company, no board initiative, whatever, undertaken without using Pegasus. But that doesn't mean you throw out Morningstar and Morningstar is useless, or Thomson Reuters or Bloomberg or LASG, which is the London Stock Exchange that owns a big platform called Refinitiv Icon. That's a news service, and it's got analysis there, and there's other analytical systems. It all needs to be consulted with, but we need to put Pegasus in there again, because it's very clear it's the people that create the financial value. So why not know more about the people up front? Now, the burning question that some of you might have had is, how much financial behavior does this create? And we've done some simulations, and at the back of the report, you'll see the 495 companies that we assessed in the S&P 500. We ranked them all from 1 to 495 effectively, based on results, relationships, and then the financial value creation capability. But if you take the top 25 stocks on financial value creation capability over a 5-year period, they outperform the S&P by 32%. And I think that's just standalone. If you had invested $1,000 in each of those 25 companies 5 years ago, you would have generated a 32% higher return than the S&P 500. Now, we've done other analysis in there by looking at doing the same exercise within sectors, other company pulling together portfolios based on other requirements, because it's not always, portfolio isn't always just going to get built on the top 25, but we are coming out with numbers like that across the board. And so I think it does prove that leadership matters. I think this opens the door that if you are in a role where you have got to build portfolios, why not know this? We think that Pegasus ratings will be, and we've had some discussions with people about it, could be used to build ETFs. or certainly larger private portfolios run by family offices, sovereign wealth funds, and the like. And so in terms of, I got the 1 to 5, the numbering wrong there, but in terms of how do we see Pegasus ratings being used? One, we're going to launch a subscription service using interactive dashboards so that anyone can tap in and see where a company is at in the context of its financial behavior, value creation at any time. So comparable to Morningstar. The data could be used to build portfolios. It can be used to do due diligence services, whether it's on a public or private company. Leadership development, I think also innovation development is another service within that. And then overall organizational development services. Why wouldn't you, if you're a recruiter at the top end, helping a board recruit people, why wouldn't you look at this? I think, and there are more services that I could list than are mentioned here. And again, I emphasize that while we did this report for public companies in the S&P 500, the same thing can be done with private companies. I think there's a huge opportunity in that area to do more due diligence work. I think there's a huge opportunity to do investment work as well, particularly if you're involved in the construction of portfolios. So that's really the genesis of what I wanted to present today. So I'm going to put it across to Leon to help me handle questions.
All right. Thank you, Hugh. That's pretty fascinating. I'm sure everybody's absorbing it, but does anybody have any specific questions for Hugh?
Yeah, I do. This is Greg.
Great.
I've got I guess a couple of comments and a question, but the comment couldn't be more timely. I was reading last night, Rob Arnott, one of the bigger investment managers in the industry, is launching a new S&P. I can't remember the name of it, Hugh, but it's essentially when you get removed from the S&P and you get replaced. So he started looking at the funds that are getting removed, and they're outperforming their replacement funds demonstratively, Hugh. And so that is worth you and Ryan going really deeper into, because those leadership teams, I don't know if there's changes or not when they're getting removed, but I think he's just stumbled onto a pretty big thesis. And this might be a firm that's really interested in this level of analysis. But that was one timely thing. Two, looking back at and seeing Kelly, the great years, with Merit's leadership team, what we had the least of, not only in the leadership team, but the firm, were strategists. At a point in time, Doug Blanton and my business partner were the only strategists. And so it'd be very fascinating, Kelly, to see the dynamic of the new leadership team. But it's just so palpable for me to track through influencer, initiator, strategist behaviors and where the rubs came. And then, of course, my engagement personality, in all of that. But it really rings proof positive to me through my years. And I think Rick and Kaylin and Doug and Amelia would all line right up. But could you just tell me about the name, the Pegasus? Like, where did you derive that? I didn't catch that part of it.
Yeah. Okay. So that's a good question, Greg. It's very, very deep. So actually, Pegasus came when I first formed Coddington Financial Services, which is the family office business I had in Australia. Coddington was our family name because our family went to a town in England near Manchester called Coddington in 1076 when William the Conqueror went over. And the logo, the family logo, had a Pegasus in the middle of it. and it still does. And I wanted it modernized and for building the company brand. And then I looked up, okay, what does the Pegasus mean? And so the Pegasus is all about revelation. And we put the Pegasus then had a compass around it for setting direction. So go and get revelation and then set direction. Now, that was designed 5 years before I cottoned on to the DNA business and that I would become all about revelation in a lot of ways. And I thought for this, that Pegasus would be a very apt name, given what we're doing, because the power of this is that we're able to get in the minds of every company leader, if not just global leader, full stop. We've been asked to do this for a government, and come up with these ratings. So if you think about it, the potential power of this is huge. This whole digital scan process in being able to assess company leaders.
Extremely cool. Thanks.
And
Thanks.
That's what's making me want to have it, Greg, as a standalone business.
Yeah. Thank you.
And be very focused on it. So thank you for asking the question, because I think that you helped me bring out the power, address the power of this and why this is so important. This is not a fad. And I think that, for us with DNA, the Pegasus service that we've talked about here, the behavioral rating service, and really what we're starting to do around the hyper-personalization, which we've talked about with you, which is our differentiator there again, is money. The money behaviors. This sets us up very powerfully for the future. And I know all of you have heard us talk about money energy in the past. Essentially the money energy formula is running underneath all of this.
What other questions?
Hugh, this is Julie. I had a question for you in terms of, does the assessment come through and assess crisis management? So in other words, if you're looking at companies to put together a portfolio and we're saying that, these returns are going to show up in the next, 1 to 5 years, but obviously with things changing so rapidly, as on top of we've had, events like the pandemic, do we have any way to be able to take these ratings and be able to assess how well they pivot?
I think we can. We haven't got that far yet.
Okay. Because this is
I think this opens up the door, Julie, to being able to ask all of those types of questions and then to use the AI, because we've got the Gene AI now that we're using in the mainline DNA platform. We are going to have it. This will have its own customized Gene AI that will have a whole set of different prompts with it to address questions like that will then help you assess the leaders, but go and look at that in the context of other information that needs to be reviewed.
Perfect. This looks great.
Hugh, it's Bill. Couple things. First of all, you've got the word quantum in one of your earlier slides. And I'm just wondering what that relates to. And second, it seems to me that there you could pre-design some use cases or scenarios for different companies with different objectives and outcomes for both the short and intermediate term.
Yep.
If you've got a company that the board has decided we need to go ahead and sell this thing or spin pieces off, you don't need initiators, right, coming in there. You need different personality groups for the teams, and so the different
I think that's the next layer of it, Bill, for training and development, is to have all those kinds of case studies.
Mm-hmm.
And I think a big one will be innovation.
Mm-hmm.
because I think you're going to see that in the top level leadership teams, there's not sufficient innovation to make the changes that are needed. And they're going to have to look down layers inside the companies. And that will be a big area for that. And the quantum was there before. It was really just more, I suppose, me saying that we've got very high computing power going on here inside our Microsoft platforms to do this work.
I would encourage you to tweak that.
Change
side.
that. Yeah.
Yeah.
But thank you. That's fine. Any feedback is good.
So right now, you just did a public review of all the board members and key executives of each of these companies?
Yeah.
Okay.
And it's really just the executive team, mostly, right?
Not even the board. It's the executive team.
Okay.
Now, Raghu, we could go further, but we haven't done that for those particular companies. And I think that's in part also what Bill's alluding to. We could pretty well go all the way through a whole company.
Yeah. And what would be fascinating is to do, going back to Bill's comment, or from a use case standpoint, for all the VCs and the PE firms who are actually wanting to go through the M&A investment rounds, trying to fill, enhance the management teams of the companies that they're investing in, not just public stuff.
Yeah.
Now you can actually do a public versus private, valuation comparison, which was always very iffy. So what would be fascinating is to do that comparison to say, hey, if you're actually investing one of these 25 styled companies and you're actually trying to evaluate investing in a private company that you don't have the luxury of evaluating yet, can you actually now see if you invest, what kind of key management changes you need to do as part of the mechanism?
That's what we would say is the BeSci due care service here.
Yeah.
That is what should be starting to happen. That's what we would want to start to happen.
Yeah.
And I think there's a huge opportunity to do a lot more work there. And I think it's just really getting the VC people or the PE people, investors, over the line of taking this into account. Now, they will all, you listen to their presentations, all say people make the difference.
Yeah.
But they do nothing in terms of the people work.
Yeah.
But that barrier is out of the way now. There is no excuse not to. I mean, I can see maybe getting people profiled is an issue or is a mindset barrier, but they've got 60 days to do due diligence.
Yeah. And they can they're doing all the executive management interviews all day long anyways. It's not like they're not looking under the curtains.
Well, you could put this assessment in front of every deal that comes in front of them.
Correct.
And all of a sudden you've got a really great filter because you quantified the qualitative assumptions that have to be made after you take a look at the business cases being presented. Now you get to flip that upside down.
Yeah, and I think at a minimum, what this does is it gets the investor or the board to ask some different questions and to probe deeper where there's something that's not adding up.
Yeah, and so one more question. So who gets access to Pegasus? Both from the company standpoint and otherwise.
Anybody that is on in the future, anybody that's on one of our enterprise subscription packages,
okay,
will get access to this. Now you're not quite on that because of your, different partner arrangement, but we can talk with you, Raghu, about that so that we set you up.
Yeah. So one is, getting onto the platform, exposing to the platform use standpoint, but the other is, me using from Raghu's standpoint. So
yeah. So this would become part of what you do in Wired to Perform. We will build that. We will work with you to build that in, and then you will see every time you scan somebody, it will show up in your web account.
Yep. Perfect.
That's
Very
how this is going to work.
Yep. But
we're not going to let people do this on a one-by-one, small time basis. The people who do it got to commit, and we're not just going to let anybody walk off the street and do it.
Yeah, but the S&P 500 data set that you're actually going to expose. So is that for public use, or that's only for partners?
The methodology of going in and scanning people, that will be for any enterprise partner user.
Okay.
The report is really more a demonstration of what can be done.
Okay. Are you planning
to turn this into
every once a
We'll
month?
turn this into its own subscription service that then anybody can access.
Yeah. So that was my question. So anybody can actually access that report that hopefully will get refreshed every once a month or whatever it is. Yes.
Yeah.
Very cool. Good.
And Raghu brings up a good point. You probably need to put as of date on your ranking page of your report queue, because those things are changing all the time.
I thought we had that, but maybe we haven't. I thought we had 30 June, but I'll check that. But that's a good point.
Yeah.
Yes, because it's dynamic.
Yeah, right.
And it does change. Ryan reminds me of that.
We have a couple more minutes, and this has been great content. Anybody else have a question for Hugh?
I do know, like in my Fidelity account in the research section, I can go in and I can take a look at ESG ratings and things like that. You guys might want to hit up some of these firms that are showing this in their research sections.
Yep.
And make that information, dynamic. I don't think it'd be very difficult for you to do, because you've got the capability to scale this thing. But that's where you're going to start getting adoption, is when that starts showing up on really credible websites.
No, and that's really what the sort of our work is focused on at the moment there. And Fidelity is one channel of this, Bill. There's some other channels that we've found are quite interesting as well.
Super.
For both public and private companies. But you're dead on. That is it.
Kelly, I know you had a question also. You're on mute, Kelly.
And Anissa had a question, I think, Leon.
Oh, okay.
Leon, I'll just catch up with you tomorrow during our meeting.
Okay.
All right.
Anissa, I think you had a question, was it? Did you?
I did. First, holy cow, wow. Let me just start there. Over the years, we've spent tens of thousands of dollars on assessments. Never in my wildest imagination could I have imagined what you guys have created. So bravo. My mind always immediately goes to, what are the critics going to say? What's the pushback going to be? How do you overcome the I am curious where your mind is already headed related to the traditional methods for evaluating leaders and et cetera, and resistance to change. So what are your thoughts about the detractors, those who are going to say, oh, this science isn't real, et cetera?
So I think the first thing is, and it's a good question, that gets to the core of it.
Mm-hmm.
First is the science is real. Right. 2, I built a bunker in my backyard so that I can live under the ground if someone wants to come and take me out. So I think in building this, I mean, I sort of make a joke, but in some ways, coming out and being able to publish an evaluation of all of these companies in the way we have is fairly upfront. It's a reasonably courageous thing to come and do, which nobody else has done. And there's going to be somebody that doesn't like it. But I don't think too many are going to be able to argue that the results are fairly accurate as to where their company is at in terms of the sector. And if they don't like the measurement for them, they can come and get fully assessed. And so we see that while we are, as a business, going down the path of making the digital scan the front end process, we still see a huge uptick in the normal behavioral profiles being done. And I think in the end, in any due diligence exercise, this will become the upfront exercise to give you a scan, a read, but everybody's got to come and get the profiles done. And if an S&P 500 leadership team wants to come and have a crack at Q, we'll come and get assessed. That's our response to that.
Yeah.
But I think somebody's got to, like golf has been changed with LIV golf and all of this stuff. There's no reason why the whole way in which leaders are assessed, companies are valued, can't be taken on with something like this right from the core of it, the people. And there will be detractors. There will be detractors. But the answer lies in, we'll come and get properly assessed. It's just like a financial advisor, a lot of them, and Kelly and Greg know, they don't all want to use what we have up front for varying mindset reasons. They should. Okay, the digital scan helps them out, but we see in the end that's going to encourage them to want to know more.
Yep. Fantastic. I've got two quick follow-ups if we still have a moment.
Yeah.
One is something that you said earlier in the conversation today, which was specifically around investment companies, simply investing in companies, knowing they're looking for a unicorn, knowing that 85% of their investments are going to tank. They're just assuming, okay, 85 cents on every dollar we invest is a loss leader looking for the unicorn. I see this as an opportunity to get into the minds of those and use it as a leverage point to literally say, what if you could increase your odds by even 10%? What if you could take that number from 85 to 75? And the possibility is much more real. I also am I thinking about that accurate?
Absolutely right. Increasing the investment alpha, and I think that now we've got some of the numbers we have, we could come and say what that percentage should be. We certainly know that the failure rate is very high, and it's way too high. And I've never understood it. It does not need to be accepted, that kind of that failure rate. So you're thinking about it exactly the right way.
Very exciting. My other thought was around partnership. Obviously now this is what you guys have boldly done with S&P, and this analysis is incredible. And now we'll have some opportunities, I'm assuming, to work with some companies, get some benchmarks in place before and after, and really over time create these case studies and et cetera. What are the plans to partner with consultants and your larger network base in bringing home some
well,
real applications?
That's totally what we want to do. We want to get this in the hands of everybody and the capability to do that. So that initiative has started. That's really is the crux of the growth plan out of this, because the message is behavior makes money.
Yeah.
And to date, while we have been uniquely positioned as a behavior and money insights company, and a little bit seen as doing that in financial services, we've always had the leadership development there. And my dream has always been to take leadership development to the place where we assess how can those leaders make money. Now, that doesn't wipe off the map everything else around emotional intelligence development needs, but we need to go out there strong on this, Anissa. And I think all those opportunities that you talked about are there.
Yeah, I think
and we are ready and waiting to do it. I think this is just going to be the framework within which it can be done, and put a standard around it.
This assessment fills a void that is relevant to the leadership development piece that was always based on assumptions and perspective, not on data.
Yeah, and as you know, I mean, I know that you've we're relatively new to you, and you've done a lot of disc profiles and other systems in the training firm that you've got. And I think we've talked to you about the fact that we've got the profile converter capabilities as well. We can go in there to existing teams where there's existing data points already in terms of profiles done, convert them, and run all this through that model and come up with analysis. That could all be done now.
Brilliant. Very exciting. Thank
Great.
you.
Thank you for the questions and for the excitement, because that gives me motivation.
Super exciting.
All right. I know we want to be respectful of time. This has been a great session. The intent was really just to expose everybody to this, which we're obviously pretty excited about. I told Hugh that both of us come from an accounting background. There's always been that propensity to never measure human capital on the balance sheet because it really doesn't exist. But this is certainly a way to really predict how a company is going to create value. So we're pretty excited about it, and you'll hear more about it. We'll be releasing information on it, and we just appreciate your time today. I will send the presentation that Hugh presented today along with the recording. We'll just have to touch it up a little bit, but I will make it available to everybody that was on the call.
Yeah, and I think that today we really are now reformed accountants, and as we come up with more insights, more case studies come out, training modules, whatever, we'll have more of these calls so that you all get exposed to it and can be equipped to doing it. But I think right now we've got a whole new dimension that can go and be tackled and make us all different in the marketplace.
Brilliant.
One final question: Are you comfortable with us sharing the recording with others?
Yep,
absolutely, Greg.
The recording
that would help a lot. Spread the word. Great. Congratulations.
And Greg, the final report is getting worked on at the moment. The wording won't change, but the graphics and everything will be upgraded, because you can see these graphs are sort of what Ryan and I have cobbled together. That's not our day job. We've got someone working on it at the moment, but when that's ready, we'll send it out.
Perfect. Congrats, everybody.
Thank you.